OPEC Plus is apparently discussing a pause in further production increases from October. Of course, it has been steadily moving up output. Saudi Arabia and its partners apparently have a tentative plan to complete the revival of a 2.2 million barrel supply revival, the revival of a 2.2 million barrel supply pipeline in September. Let's get more on Greg Brew, senior analyst at Eurasia Group. Greg, thanks very much indeed for joining us. So we don't know, of course, what's going on in the councils of OPEC Plus, but is that plausible that OPEC Plus would stop increasing production?
Well, hi, Andrew. I think it is. You know, they've moved a lot more quickly on relaxing these cuts than a lot of analysts predicted at the start of the year. They set off with a plan to relax the cuts by about 130,000 barrels a day every month. And then, of course, they very quickly accelerated that to 400,000 barrels a day per month. And then their latest increase is over 500,000. So a 2.2 million barrel a day cut relaxed that was originally going to be relaxed over the course of 18 months. It's only taken about 6 or 7 months for them to relax this cut. So they've moved very quickly. That suggests that, you know, news of a potential pause or reconsideration of relaxing additional cuts, that sounds pretty credible to me. There are additional cuts that OPEC Plus has in place. There's a 1.6 million barrel a day cut that's supposed to stay in place until the end of 2026. Given how quickly they're relaxing this current cut, I think a brief pause by the end of the year to assess the lay of the land, to get a sense of what the demand situation might be, I think that sounds plausible.
Now, OPEC, of course, wants to talk up its business. It says that global oil consumption will keep increasing right up to around 2050. Is that plausible? Or, I mean, we are seeing rapid growth in electric vehicles in many parts of Asia, for example.
Well, you know, every time you get an OPEC forecast, you do have to bear in mind that they are talking their book to a certain extent. These are countries that depend on oil production, oil exports to meet their financial needs. Some interesting things about this forecast. In the short term, it's actually looking a little bit more realistic. They've downgraded their demand forecast for next year. They brought it down for the subsequent years, 2027, 2028, largely based on expectations now that Chinese demand growth is slowing and could potentially peak in the next year or two. On the flip side, a much more bullish estimate of what the rest of the world is going to be doing, particularly India. OPEC now sees Indian oil demand more than doubling over the course of the next decade. India, of course, is one of the fastest growing economies in the world. It's got a fast growing population. So some of this is based on the prediction, based on the expectation that Indian oil demand will grow. But there is a certain amount of aspirationalism built into that forecast. As we've seen in the past, OPEC likes to be more optimistic when it comes to demand forecasts than other groups.
What is your take, though? I mean, India is, of course, a factor. But I wonder, though, are people going to go to electric motorbikes? I mean, motorbikes throughout many, and scooters throughout many developing nations are the basic mode of transit. Are we going to see electric two-wheel vehicles transforming the energy market?
Well, you know, this new forecast has OPEC doubling down on this idea that India is going to become the new China. China, of course, was the engine of oil demand growth for more than a decade. Following the 2008 global financial crisis, China was adding 1 million barrels a day in new oil demand growth every year. Since COVID, of course, we've seen that pace decline significantly. The nature of the Chinese economy has changed. The energy transition is accelerating. Now, OPEC is saying, you know, what we saw in China in the 2000s, the 2010s, the exact same thing is going to happen in India. I'm more skeptical. I think this elides the progress of electrification. I think India is going to see a lot more EVs on the roads over the next 5 to 10 years. The Indian government has pretty impressive plans to increase the pace of electrification, to increase the size of the EV fleet on the roads in India. Now, the OPEC prediction is also based on Indian jet fuel demand growing, Indian oil demand for construction, for middle distillates, for petrochemicals, all of that going up. And we could see a bit of that. But the idea that India is going to have the same kind of oil demand-based boom that China had, I don't think that's in the cards. I think we'll see an increase in Indian demand for sure, but I think the OPEC figure is way beyond what we're likely to see.
The Houthi rebels still attacking ships, disrupting shipping, but the oil market seems remarkably calm.
Indeed. I mean, in a way, this is an old story, right? The Houthis started their attacks in late 2023. Commercial traffic through the Bab el-Mandeb, through the Red Sea, has declined significantly, although there are still ships moving through. I think for the oil market, the Houthi story has remained more or less the same. Right? Show me the barrels. Show me a physical disruption. These Houthi attacks this week came as a surprise, given that they supposedly have a ceasefire with the United States that's been in place since May. They have, of course, continued to shoot ballistic missiles and drones at Israel. My sense is that the Houthis are trying to get in a few big attacks before a potential ceasefire in Gaza. We've seen a lot of negotiations take place over the last week. Israel and Hamas are potentially close to a deal. And if there is a ceasefire in Gaza, the Houthis have said that they will stand down, that they will end their attacks. This could be an attempt by the group to get in a few more big attacks before they have to take a pause with the ceasefire.
Broadly, let's put up a 5-year chart for oil here. We got a prediction from RBC this week that the Brent price may well drop, the world price may well drop into the 50s later this year. Would you be as pessimistic as that?
I think there's ample scope for a decline of that magnitude. I think we saw a similar estimate from Kepler a day or two ago, seeing prices down in the 50s. I think some of it will be based on how quickly production stalls or declines in the United States. Of course, there's been activity on the U.S. shale sector showing companies are drawing back on capital expenditure, drawing back on rigs. That's going to cause U.S. output to decline. If it declines slowly, then that's going to keep more barrels on the market, and that could put prices low. On the other hand, what we talked about at the beginning, these OPEC production increases, the market has become a little bit more skeptical as to whether these announcements are really reflected in physical barrels, right? A lot of these barrels are already on the market. Various members of the OPEC Plus group have already been producing well beyond their quotas. So the market will have to see a real increase in physical supply. We'll have to see inventories rise. We'll have to see supply outpacing demand growth to push prices down from their current 65 to 70 range down into the 50s. But I do think it's possible. It will be based on that supply increase, and it will be based on macro factors such as U.S. tariffs, trade policy, really putting a dent in demand growth moving from Q3 into Q4.
So that's interesting. Sorry, we're almost slow. So we're almost out of time. So you reckon these announced production increases are a bit misleading because some of the barrels are already on the market. But you do see potential pressure on oil prices later in the year. Just remind us of your thesis very quickly, if you would, Greg.
Sure. Very quickly, there are members of the Group of 8 and OPEC that have already added their barrels. So the monthly announcements of 400, 500,000 barrels a day are a bit misleading. At the same time, you have members of the group like Saudi Arabia, Kuwait, that are going to bring barrels back online. There is OPEC supply that's going to hit the market, and that's going to put downward pressure on prices.